Warren Buffett is like a superstar in the investing world. He's been running a huge company called Berkshire Hathaway for a long time and has turned it into a financial giant worth billions of dollars. He's really good at making money, and he does it by following certain smart rules for investing. Over the years, he has made an average of more than 20% profit every year. Whenever Warren Buffett says there might be a problem in the market, people pay attention because he's usually right. In a video, he talked about how there might be trouble in the real estate market.
But it all has consequences, and I think we are starting to see the consequences of.
And he thinks it's because of some things happening in the economy and history. House prices are at an all-time high, and interest rates are going up. This, according to Buffett, is setting the stage for a correction, which means that prices could drop. Even though this can be scary, understanding why Buffett is saying this can help people who want to invest or buy homes be prepared. To really get what Buffett is saying, it's important to look at how the housing market has behaved in the past. Throughout history, there have been times when home prices went up a lot and then went down quickly. After World War II, there was a huge demand for homes because the economy was doing really well. People invested their money in homes, and this caused home prices to go up a lot in the late 1940s and into the mid-1950s. At its peak, the price of homes was nearly 7 times the average family's yearly income. However, when interest rates increased in the late 1950s, it caused the housing market to take a hit. Home values dropped over 25% between 1956 and 1962 because homes became less affordable. Similar patterns repeated in the 1960s and 1970s when interest rates were low and loans were easy to get. People invested a lot in homes, causing the price-to-income ratio to exceed 5 times by 1978. But when interest rates were raised to combat inflation, it led to a housing crash. Home values fell by almost 30% from 1978 to 1982. The 2000s saw the biggest housing boom in modern history. Mortgage lending became less strict, and interest rates were at historic lows. Lots of money poured into real estate. In 2005 and 2006, the median home price was nearly 5.3 times the median family income. However, when people started defaulting on their loans, there were a lot of foreclosures, and a financial crisis followed. Housing prices dropped by more than 25% nationwide, with some areas losing more than 50% of their home values. Each of these cycles followed a very similar pattern. Extended periods of low interest rates and easy lending standards caused home prices to go much higher than usual. But as economic conditions changed and lending rules became stricter, homes became less affordable and the housing bubbles burst. Many experts believe that we might be due for another correction, and Warren Buffett is warning us that the signs are there. Interest rates are going up after being very low for a while. The Federal Reserve has been increasing rates because of inflation, which is making mortgages more expensive. The average 30-year fixed-rate mortgage has gone up from 3% to over 7%. This means that homes are becoming less affordable because monthly payments are going up. People who bought homes recently, hoping that rates would stay low, are now facing higher costs. If the Federal Reserve continues to raise rates, many homeowners might find themselves owing more on their homes than they are worth. In recent years, loose lending practices allowed investors and all-cash buyers to flood the housing market. Some investors even bought 10 or more homes just for rental income. Lenders made it easier to get loans with low or no down payments, which inflated prices quickly, but also made the market unstable. If vacancies increase or rental income drops, investors might start selling properties, leading to a surplus of homes. People who don't have much equity in their homes may also stop paying their mortgages. Buffett sees these warning signs and is alerting us to the potential problems. Rates are still lower than usual, but they are rising fast. So if things don't change, we could have problems in the housing market. Buffett's message is not meant to create panic, but to help us understand the risks. If you're a homeowner, it's important to consider your own situation and options. If you can afford your home for the long term, you'll likely be okay unless you lose your job. But if you have a high loan-to-value ratio or an adjustable rate mortgage, it might be a good idea to refinance to a fixed-rate mortgage. Locking in a lower monthly payment can protect you against rising costs. Renting is also a sensible choice if you're concerned about overpaying for a home. and it gives you flexibility if your job situation changes. Making unwise investment decisions during uncertain times can be costly. For investors, Buffett advises caution, especially when home prices are high and economic challenges are on the horizon. It might be better to wait for better investment opportunities. In summary, Warren Buffett's message is about staying aware of the situation and making smart decisions even in uncertain times.